Hi everyone, so this video is for new business owners, just to answer some frequently asked questions and to provide some tips if you're just starting out. So the number one thing to do is to get a separate bank account. Now it doesn't need to be a business specific account, it just needs to be separate from your everyday spending account. Your accountant at the end of the year will thank you when all your business transactions are separate from all your personal transactions. The number two thing that you need to think about is what business structure you'll use. Most people start out as a sole trader as it is easy to set up. You don't need to register with any government organisations or fill out any complicated documents. However, a company structure will provide you with limited liability, which is a big advantage. If you want to start a partnership, then I'd highly recommend you get a partnership agreement in place. This just sets out what everybody's roles are, and it really helps further down the line when the business is getting a little bit stressful, then you know who has the responsibility for what. It also outlines how the profit is split. You also need to remember to keep a copy of your invoices for 7 years. Your accountant might ask for a copy of these at the end of the year, or the IRD could ask for them if they're doing an audit. You also want to consider what accountancy software to use. So Xero and MyOb are the most popular software in New Zealand. There are apps that integrate into these. So for example, farmers like to use Figured for the stock reconciliations, or tradies might want to use Tradeify or Fergus for the invoicing and for the job scheduling. Another thing to think about is what software your accountant uses. So for example, I use Xero and I like to encourage my clients to use Xero. I think that it's extremely user friendly, and it also does help save on accountancy fees at the end of the year if you're both using the same software. Another popular question I get asked is, how will I get paid? So you can either pay yourself by drawings or you can be an employee. With drawings, tax isn't deducted, so you will pay all of your tax at the end of the year when your accountant files your tax return. Unless you're in the provisional tax regime where you pay tax in instalments throughout the year. Alternatively, you could pay yourself as an employee of the company. This means that you're paying yourself regular amounts and deducting tax. This does help to spread your tax in small amounts throughout the year. However, one thing to keep in mind is you need to just watch how much profit the business is making, because if you do accidentally pay yourself too much in wages, then it is quite difficult to get this amount back from the IRD. Another thing to think about is whether you'll register for GST. Now, if your turnover is in excess of $60,000 a year, then you will actually need to register for GST. You might also want to consider, though, registering for GST if you trade mostly with GST registered businesses or individuals. Being registered for GST in this instance will not put those individuals off doing business with you, because they can claim the GST back on your invoices. And obviously it will enable you to claim the GST back on your expenses. With GST, the $60,000 threshold is based on your turnover and not your profit. So that's just one thing to keep in mind. It is also based on a rolling 12-month period rather than your tax year. The next thing that I get asked heaps is, how much income should I put aside for my income tax and for my GST? This is a really difficult question to answer. There is no exact calculation, because the income tax and the GST that you pay is based on your expenses, and you don't know what your expenses will be until you've actually incurred them. So just in order to be safe, I'd suggest putting 15% of your income aside for GST and say 20% aside for income tax. Then that should cover you at the end of the year when your income tax bills are due and a GST, however frequent your GST returns are filed. The next thing you want to consider is your business name. Now you'll just want to check if there are any other businesses either in the same industry or in the same area as you using that same name. You can also do a check to see if there are any trademarks on the name and the logo. And another important thing to check is to see whether the domain name is available. Most businesses these days do rely on a website to generate sales, so that is another important consideration. I'd also highly recommend doing a monthly profit and loss forecast as well as a budgeted profit and loss. So there is a difference between cash and profit. So for example, you might have cash in your bank account and still not be making a profit. This is often the case when a business gets funding from a bank, or if you inject money into the business yourself. It could also be the other way round. You could be making a profit and not have any money in your account. That could be the case if you're investing in new plant and equipment, for example. A cash flow forecast will just help you to identify any times that you might need to ask the bank for example, an overdraft, or times of surplus in your business where you could invest the money elsewhere. The last thing to think about is invoicing. How often you'll invoice your clients and when those invoices will be due, as well as if you'll get terms and conditions signed by the client prior to commencing work. Having a properly developed set of terms and conditions can really help to protect your business in the event of bad payers. You might also want to consider asking your clients to pay up front. This is often the norm in many businesses, for example with builders. Thanks for watching this video, guys. I do hope that you picked up some useful information. However, if you do have some further questions, then please don't hesitate to give me a call or drop me an email. I'd be very happy to help.